David, good to see you. We've been seeing a pullback in tech over the last several weeks here, Meta becoming the final Magnificent Seven stock to turn negative for the year. We're keeping tabs on it to see if it can get back into positive territory here today. But you say this weakness overall among the Mag 7 is breeding opportunity. Why is that?
Brad, love seeing you, man. Love talking to you, but you're exactly correct here. I think we all know that the S&P 500 has now pulled back 10% from its February 19th high. But a lot of market participants feel like that pullback is much worse than that 10% because a lot of people are very much over leveraged or over allocated to this Mag 7 area. So we've seen a lot of these names pull back, 15, 17, 18%. But as you pointed out, I think this volatility breeds opportunity to get back into these names right now because I think they have such a long runway for growth moving forward into the future. I mean, look what Jensen just said yesterday at the GTC keynote speaker. Like this data center opportunity could be a $1 trillion opportunity by 2028. Yet CapEx spending for 2025 is only expected to be at $313 billion. So you can see almost a 3x CapEx spend that really goes to the revenue of a lot of these companies within the Mag 7 area. And Brett, as we talk about many times on this show, these Mag 7, I love them right now. It's hard for me to say that because I am a small cap portfolio manager at heart. But these 7 stocks, even Tesla a little bit, they have that characteristic of operating leverage where they can really see some top line revenue growth that really makes their bottom line explode higher at a much greater clip.
That is a remarkable point that you made as well, David. I mean, even your small cap heart is now looking at this dip and saying, okay, you can't really avoid an opportunity like this. So what type of diversification should people still be balancing their portfolio with, even if there is this outsized opportunity?
Great. Another great question there. And that's also me saying I like the Magnificent Seven on their pullback. When small caps, my bailiwick, my love of my life, it's also pulled back, almost 17%. So what I would do right now, Brad, is probably 2 things. I love the barbell approach. I love barbelling the mega caps that have this characteristic of operating leverage. But I also like owning some higher quality small cap stocks that are very much depressed in valuation. I think you can diversify your portfolio by owning small cap value because if you think of that antiquated tic-tac-toe board that Morningstar uses, like the S&P 500 is in your top right now, large growth. And there's no better way to hedge your portfolio by going on the opposite spectrum of that tic-tac-toe board of owning small value. So I think if you can own some quality small value, I think it's a great pair with owning your mega cap tech stocks. And the second thing I think that you can do to kind of hedge your portfolio if you expect to see, a little bit more volatility on the downside, especially as we, go up against that April 2nd tariff deadline. I think you can own some long puts within a few different active ETFs out there that are not handcuffed to the calendar, they're not calendar constrained, that are very much active underneath the hood of the active ETF itself that owns these long puts.
Okay, I want to get to some of your picks, and then we'll pivot perhaps to discussing the Fed and, of course, the decision coming later today. But first, some of the other areas of opportunity that you're looking across right now. One of them happens to be a Mag 7 name in Amazon, but you have 2 non-Mag 7s in there, in United Healthcare, and then you've also got Copart. Why those?
Yeah, Brad, I think we'll start with the Amazon. And I think the most simplest way of saying this is in 2 facets. Amazon's cheaper than Walmart right now. I own both stocks in my concentrated portfolio, but when was the last time we saw Amazon trade at a valuation relative to Walmart that was cheaper? And then you couple that with the aspect that Amazon is one of the best companies that highlights the operating leverage within the Magnificent Seven, especially on the retail side and on their cloud side. So I think the valuation is very palatable right now to own Amazon. If you look at the other side of the spectrum, I also like owning healthcare right now. Healthcare, historically speaking, has been one of the worst performing sectors during presidential election years. And that's exactly what we saw in 2024. But now that we're in 2025, we recognize that healthcare tends to be one of the best performers coming out of this presidential election cycle. And one of the biggest beneficiaries, I think, there would be UNH. It trades at a pretty hefty discount to the S&P 500 by about 20%, putting it at almost one of the largest valuation spreads versus the S&P 500 ever. And I think a lot of the headline risk is overblown. The fundamentals remain. So I like UNH. But the third stock that I like here, Brad, is a little bit differentiated. It's kind of an unknown name. And obviously, with all the jargon and headline risk around tariffs, I tend to skew a little bit lower down to the market cap spectrum where you can get some more domestic exposure. And Copart is one of the coolest stocks that doesn't have any tariff risk, that has a long runway for growth. It operates in an oligopolistic type of market with its only peer being IAA. But as bad as it is to say this in an altruistic as I want to say this, Brad, like Copart's the best way to play texting and driving because they're basically an auction for salvage cars, and they kind of have their hands in the pockets of a lot of these different insurance companies where they can get these salvage cars. And I think the best statistic to say here is if you go back 10 years ago, of all the cars that were in accidents, about maybe 12% of them were considered, totaled. Fast forward to today with all the bells and the whistles and the electronics, it's closer to almost 23% of cars that get in accidents are considered total. And the biggest beneficiary of that is going to be Copart, and they trade at a reasonable valuation.
All right, well, I would imagine Copart would hate to see a full self-driving coming because that is anticipated to cut down on some of those accidents. David, thanks so much for taking the time here with us today.
Thanks, Brad.